Hi, Norman Howlett here with your next 4-minute drill for traders. In our last few drills, we've been hitting on some of Warren Buffett's memorable quotes, and here's another one that we can analyze and apply. Now, in this quote, he refers to his friend and co-author of The Intelligent Investor, Ben Graham. Here's the quote. Long ago, Ben Graham taught me that price is what you pay, value is what you get. Whether you're talking about socks or stocks, I like buying quality merchandise when it's marked down. Great quote. We have to consider, of course, that Buffett is primarily a fundamental investor and not a technical one, so I find it useful to take a statement like this and use it to set up some possible trades. Here's what I mean. Buffett is looking for value in a stock, something that for him is demonstrated in a long-term company with great management, and maybe a product that's inconsistent demand, etc., that kind of thing. Those kind of things spell value to Warren Buffett. Now, if the price is low compared to the value, that's going to draw his attention. For me, I like to go ahead and take a stock whose price is undervalued, as Buffett describes, and then turn to the charts for a trigger to get into that stock, say on the long side. If it takes off immediately, all well and good, but if it lingers at the same price for a while or even drifts a bit, my plan for these picks has me staying in these stocks longer than I normally would because I'm in a longer term value play. It seems that half these picks give me a nice short-term profit and I take fairly quickly as the price falls more in line with value, and then the other half becomes longer-term investments that I stay confident with because their value is proven. I find that for my retirement account, these undervalued stocks give me a nice long-term base, plus give me some nice pops of growth when one hits quickly. I use daily bar charts for these plays, and they've really done well for me over time. How about you? Have you ever combined fundamental analysis and technical analysis effectively in a trading plan? If so, what are some of your parameters? Be specific. Bank of America has been a consistent hold of mine for the last 3 or 4 years. It was a real value play when it was in the single digits and gave me a nice pop, but now it's just a good long-term hold with the position I have remaining after some of that pop profit I talked about and took earlier in that trade. Bank of America has been around forever, and when it fell hard during the bank crisis, it set up an undervalued opportunity, that kind that Buffett talks about, and then had a nice pop, and now it's been a steady gainer ever since. That kind of thing works for me. It's specific in a plan. Do you have any examples? What's your interpretation of Warren's statement? Let's hear from you. Okay, that's it for this edition of 4-Minute Drill for Traders. So until next week, stay disciplined.